Melbourne's property market remains the great underachiever of the nation, but that may be about to change. There are a number of key indicators which suggest better performance by the Melbourne property market is imminent. One pointer to better times is the latest property sentiment survey by API magazine, which recorded a major turnaround in investor attitudes towards the Victorian property market. The survey asked, which state or territory do you regard as having the best property investment prospects for the next 12 months? Mid-year, Melbourne and Victoria attracted only 8.6% of respondents who felt that it was the best state for property investment. But 3 months later, in this new survey, there was a remarkable turnaround, with 25% identifying Victoria as having the best investment prospects for the next 12 months, and this ranked Victoria number 2 in the nation, above New South Wales and Western Australia, and close behind Queensland in the investment popularity stakes. One of the attractions of Melbourne is its relative affordability, thanks to the absence of price growth in the past 2 years. The latest home price index from PropTrack shows that Melbourne is currently cheaper than Canberra and Brisbane, as well as being well behind Sydney. Melbourne's median dwelling price is now on a par with Adelaide and Perth. Sydney's median dwelling price is now $1.1 million, compared with just $790,000 in Melbourne. There is a growing perception that Melbourne is now affordable and poised for capital growth that would return it to its more familiar spot, which is sitting a little behind Sydney as the country's priciest market. Indeed, the latest PropTrack price report notes recent evidence of a turnaround in Melbourne. It says price falls have started to reverse in Melbourne, with buyers out in force for the peak of spring selling season. Prices rose 0.5% in October, the highest monthly growth rate amongst the capital cities, according to PropTrack. Other factors suggesting that Melbourne is due for a period of stronger property market performance include population growth fueled by overseas migrants and international students, a solid economy, and a significant program of major infrastructure developments. The latest edition of the State of the States report from CommSec ranked Victoria number 4 amongst the state and territory economies, ahead of New South Wales as well as the ACT, Tasmania and the Northern Territory. And that report said the greatest strength of the Victorian economy is the high level of construction work that's happening. The latest population data from the Australian Bureau of Statistics shows that Victoria had the second highest growth rate amongst the states and territories in the year to March, rising 2.7% compared to the national average of 2.3%, and bettered only by Western Australia. In raw numbers, Victoria added more to its population than any other state, ahead of New South Wales and Queensland. Now, Jacob Kane, who's the president of the Real Estate Institute of Victoria, says Victoria has always been an attractive destination for overseas and interstate migration. Kane says Melbourne's reputation as one of the most livable cities is well deserved. He says we have a growing population and growing demand for rental properties, with new residents more likely to rent before buying. And he says the challenge in Victoria is a lack of housing supply and the need for the government to build a stronger policy platform that will attract new property investors to meet the needs of the market. Well, one positive policy recently from the state government is the announcement that the stamp duty concession for off-the-plan properties in Victoria has been extended to investors, and also that the price cap has been removed for home buyers, albeit temporarily. This has been largely welcomed by the sector as offering a much needed boost to development. New data from the off-the-plan property portal urban.com.au has shown a massive spike in interest for Victorian off-the-plan projects after the concessions announcement, with an immediate 123% increase in direct online inquiries and a 5-fold increase in online traffic volume. Another factor in favour of investors is the reduction in the number of rental properties available, which is putting further upward pressure on residential rents. For the first time since records began in 1999, Victoria's active rental bonds dropped significantly over the 12 months to June, signalling a significant shift in the state's rental market. There are now 22,000 fewer rental properties in the market than a year ago. Victoria's high property taxes and stricter rental property standards have made owning investment properties less attractive, and these factors, combined with sustained higher interest rates, have driven many landlords to sell off their properties. Melbourne's metro areas have experienced the largest declines, with more than 20,000 fewer rental properties a 3.7% year-on-year decrease. Regional Victoria saw a smaller drop of around 1,000 properties fewer available for rental. Every Melbourne LGA has seen rents rise in the past year, with some regions experiencing increases of nearly 20%, and overall rents are, on average, 7.5% higher in Melbourne than a year ago. Another positive for the state is that Victoria currently leads the nation in first home buyer activity, accounting for 32% of new loans. Melbourne's population is projected to grow significantly over the next 5 years, further increasing demand for rental properties. The shrinking rental market, combined with rising construction costs and fewer new developments, could exacerbate housing affordability issues for both renters and buyers. Now, the Australian Financial Review reported earlier this month that Melbourne's housing market could outperform Sydney and other capital cities once it emerges from its current downturn, boosted by a marked improvement in affordability after years of weak price growth. And Nicola Powell, Domain's Chief of Research, says in the next cycle we're likely to see Melbourne overperform because it has underperformed significantly compared to other capital cities since March 2020. AMP Capital's chief economist Shane Oliver says he expects Melbourne prices to grow more than Sydney's in the next upswing. Oliver says Melbourne's been lagging for some time. This has made the property market relatively cheap compared to Sydney and the other cities. Because of its relative underperformance, it could bounce back a bit quicker and sharper. At Hotspotting, our assessment is that many of the key parameters and indicators are lining up to boost the growth prospects for Melbourne and regional Victoria in 2025. The city and the state generally are overdue for a period of price growth.